On May 14th, the market shifted. This was not just another inflation trade. We saw the tape trading policy, Nvidia licenses for China, a Boeing order that underwhelmed, and a crypto bill clearing committee. When the rules of engagement change, the market starts picking winners and losers in real time. We have spent most of the week focused on CPI and the Fed. That pressure is still there, but today, the real signal moved. Investors stopped asking about rate cuts and started asking which companies could turn policy headlines into actual revenue. Nvidia had the cleanest win. Reuters reported that the U.S. cleared about 10 Chinese firms to buy H200 chips, and Nvidia shares jumped 4.4%. That news reopened a revenue lane that many investors had written off as blocked. But we have to be precise here. A license is a path to a sale, not a shipment in the box. And a shipment is not recognized revenue until later. The bullish case is that a closed door is cracking open, but the cautious case is that export controls and Chinese customer demand still have to align. Boeing showed us the other side of the trade. Donald Trump announced that China agreed to buy 200 Boeing jets. Usually that is a win, but Boeing shares actually fell 4.7%. The market was leaning into a much bigger number, proving that even good news can be a sell the news event if expectations are too high. This is the broader theme. The diplomatic activity functioned as a stock screen. Nvidia got the green light. Boeing got the expectation check. Energy, chips, and aviation are all moving into a policy filter. The China is back trade is no longer broad, it is selective.
Crypto caught a policy tailwind of its own. The Senate Banking Committee passed the Clarity Act, moving the digital asset bill toward the Senate floor. It is not law yet, but for the industry, it is a concrete step away from regulation by confusion and toward a set of standard rules. The broader indices provided the floor for these stories to play out. The S&P 500 rose 0.77%, the Nasdaq gained 0.88%, and the Dow added 0.75%. Both the S&P and Nasdaq finished at record highs. Buyers are still hungry for risk, especially when policy gives them a specific reason to buy. Even within the semiconductor space, the gains were not universal. Nvidia carried the narrative, but several other AI names actually slipped. That tells us the market is not just buying AI blindly anymore. It is rewarding the names with clear catalysts and questioning the ones without them. Of course, the macro heat has not disappeared. Earlier inflation data made quick Fed relief harder. Rates are still a pressure point for valuations, but today, policy headlines gave traders something more tactical to focus on than just the timing of the next cut. So, what confirms this shift? For Nvidia, we need to see those licenses turn into firm orders and guidance. For Boeing, we need to see that 200 jet announcement turn into a signed contract. For crypto, the test is whether the Clarity Act can actually get floor time in the Senate. The bear case is equally clear. If the licenses stall, the orders stay vague, or the crypto bill gets buried in the next round of negotiations, the rally loses its legs. Headlines move stocks for a session, but earnings and implementation have to do the heavy lifting from here. The takeaway from May 14 is policy dispersion. Nvidia showed how a rule change reopens a path to growth, while Boeing showed how a deal can still miss the mark. The market remains bullish, but it is becoming much more selective about which headlines it is willing to pay for.